Wonderful. Good
Okay,
morning.
everyone, we have Tammy Blanchard. She's with Pacific Mortgage Capital, and she's going to talk about the non-QM loans that are available for our buyers, for our buyers that are investors. So Tammy, I'm going to let you just go ahead and take over from this point.
Okay, great. I'm not going to go into all the guidelines and details. I think that most realtors are most interested in finding a solution to problems that their buyers might have, their objections for why they aren't buying a house right now, whether it be owner occupied or investor, actually. I will start with the investor since that's one thing. We have a couple of very new and exciting products that are going to take you into a new market that you really haven't been able to participate in, and that is multi-unit commercial buildings up to 8 units and sometimes more. I've done up to 10 units. It can be all residential or mixed use. And in the past, that has been a commercial loan and a commercial realtor that would take care of this business. And the reason why is because they had the banks only do these loans. They would do short-term financing for these borrowers that really have to be refinanced every few years. They're expensive. It really hurts their cash flow. We're currently offering 30 and 40-year fixed programs for these investors with an interest-only option. And for an investor, that is a huge, huge thing. They instantly can buy a property, multi-unit residential or mixed-use property, and it begins cash flow day one. So that's a very, very exciting product. We also offer bridge loans for commercial use and for investors. Bridge loans are short-term financing. They come with a little bit more of a price tag to them, but it can help your borrower compete in this market. So I'm mentioning bridge loans, obviously for investors, but owner-occupied lately in probably the last 2 years. In the Bay Area, you're probably noticing that people are having a difficult time competing in this really red-hot market. They do not want to sell their property before they own another property. So they're like, okay, do I sell it? Do I move in with my in-laws? Do I, they're tied up. They just don't know how to get that equity out. And so our bridge loan allows your borrower to access that equity to buy first, move out of their property into their new property, and essentially make a cash offer. So we don't do an appraisal. We pre-qualify the borrower. We know their cross-collateralized property, and we're able to fund sometimes 100% of the financing, sometimes not. It depends on how much money your buyer wants to bring in. But this gives them an opportunity and to calmly and not too much stress move from their current property into a new property, fix up the old property, stage it. And I've been told, and you guys probably know this better than me, that when a home is empty and staged, it typically sells for a better price.
So Tammy, can you give me an example of some of the clients you've done this with, and what was that process like? Cost, time frames, like timelines?
Well, because it's not an owner-occupied property, I do not have to follow any of the timelines of TRID. So I like to say 14 days, but if I was in a real big hurry, I can do it in less than 14 days. I'll give you an example of when I would close it. If for some reason you're in a contract and something goes wrong with the loan or something happens and your borrower is in jeopardy of losing their earnest money deposit, I can close that loan in days. Okay. An example, I can give you many. I had a client that was moving into a new property up in Napa. Their home was in Sausalito, and they had owned that property for a very long time. So there was a lot of equity in the property. I was able to do 100% financing for this couple for their new property. And when they sold the one in Sausalito, they paid off our loan, and they were loan free in their new home. They were downsizing. So it's a perfect example. And the older people especially do not want to be without a home. It's just too uncomfortable to sell and then worry about where they're going to live.
When they get that new bridge loan, is that permanent financing, or are they coming back and buying a new or getting new financing afterwards?
It is not permanent financing. Typically, the loan is about 11 months. it is an interest-only loan. In some cases, we can even finance the payments, so there are no mortgage payments at all. If there's enough equity, we can pre-fund the interest payments, so they don't have to worry about making those payments at all. But what was the other part of that question? Oh, it's 11 months. It's typically, the interest rates are going to be a little higher. They'll be like about 7.9, 7.5, 7.5% up, depending on their credit score. And they're going to be able to, they will have to refinance. So if there's a balance due after their current residence sells, and they want to retain, maybe they want to retain some of that cash, they can partially pay off the loan and then refinance that into a regular conventional loan.
And no prepayment penalties, correct?
There is no prepayment penalty on a bridge loan.
So
some companies do that. We do not.
So who is the ideal client that you're going, this is the person that's tending to use this product more than anybody else? What does that person look like?
The person is going to be saying to you, if I'm a realtor, they're going to say, I really want to buy a new house, but I just don't want to, I got to wait. I want to make a contingent offer. And you as a realtor are going to say, nobody's taking contingent offers. They won't. So that means you have to tell your client, you got to sell your house and figure out where you're going to live while you find your new property. That if somebody feels uncomfortable with that situation, they are a perfect example if they have equity in their property.
Okay.
That's your client. And it can be, anywhere. And like I said, sometimes it's not 100% financing. I might only be able to access a certain amount, and the borrower or your buyers are going to have to bring in some of their own cash. But in the Bay Area, I find that there's people that are downsizing have a tremendous amount of equity in their properties.
Okay.
Yeah.
Are you finding there's an age group? Are they professionals? Because one of the things I was talking to Mark about was these people look at money as a tool, right? And it's just a tool for them to get to where they want to be. Yes, there's cost involved, but at the end of the day, they net more money by utilizing this tool. Can you explain that concept?
That's exactly right. And actually, not too long ago, I had a man that I worked with who was really thought bridge loans and hard money was just a very stupid, expensive thing to do. He said that, but yet he needed this bridge loan. And at the end, he was like, I'm telling everybody, this was the best thing I ever did. Using this bridge loan got me to where I wanted to go. And at the end of the day, it was actually less expensive than what I would have had to do by waiting, he was going through a divorce. That's another time that this comes up. He was going through a divorce and couldn't get, he had all kinds of problems. And he's now a true believer that this is a tool to get to where you want to go. And at the end of the day, it's way less stressful. Trying to buy and sell a house, as you guys know, is very hard on a borrower, on a buyer. There's just a lot of moving parts all at the same time. And in this one, you kind of get a break. You buy the house, you move, you're settled, then you sell the other house, and you're not waiting. You don't have that domino effect going where you have one contingent after the other contingent after the other. What I'm talking about. You got 3 deals stacked up on this one thing closing, which in our world gets very stressful, right?
Right.
Takes that out of it. So
and we're seeing this with the conversations we're having with our sellers. Like, I want to go somewhere else, but how do I get there if I have to sell my home and I don't want to make that double move? It's too distracting. And then if they have repairs that need to be done and they have children or they work from home, they can't disrupt their life.
Exactly. That's huge. That's moving twice is huge, also stressful. And like you said, it's just very disruptive to have to do that. So
expensive. Move
out and repair the house. And now you're living at grandma's maybe, or in a hotel, and getting a rental is not easy. That's just as hard as buying a home. So that's probably not even, it can be very, very stressful.
Well, you can't get a rental because they want a 1-year commitment.
There's that. I was thinking of like an Airbnb, but that's going to be really expensive. It's going to be more expensive than paying a few couple points to get a bridge loan and just make your one move, be settled, go back to work, have your kids back in their schools and doing what they're doing. I mean, we do this. I've never done so many of these as in the last few years.
So you mentioned a couple of points. Bridge loans are usually 2 points, correct?
They're about 2 points, yes.
Okay. Got it.
I should mention that just because we are a wholesale lender also. I typically will work with realtors if they bring a client, but I don't go out and market for retail business typically. So if you any of your team really has a loan originator that they love to work with, all they have to do is let them know this program's available, and we can work directly with them and your client. So you don't have to give up your favorite loan originator to work with us.
Okay.
In fact, it's great if we are able to work with them, because then they can do the takeout loan after the bridge loan is done. And then you keep your little team together.
One of the things that I find is most of our lenders have no idea about these products. They're just not used to utilizing them. So they're considered one-off, so they're not specialists. So they can't speak the language of what the benefit is and why they should be doing them. And they're just kind of fumbling through the process.
Exactly. And well, that's what will help them learn the process, which will help you and your team, because now I can give them a whole array of products like this that can help your team. So I'll share with you by email some of the things that they could share with their, that they can brand with their brandable flyers that they can share with their loan originators, so that they have an arsenal of new products that they can help you help your buyers and sellers with.
Okay. So that's the bridge loans. Talk about the non-QM loans.
Okay. So there's non-QM, and there's a whole category of those. We touched on the multi-unit, which is actually the investor program, is probably the hottest thing in the market right now. I'm not going to go over the guidelines or anything. Just know that you can sell and help your investors buy these products without any income documentation. We call that DSCR, which stands for debt service coverage ratio. So we use the property's cash flow in order to qualify for the property. Your investors will love that. That's how a normal commercial loan operates. So it's new in our residential, in this market. We're used to do 1 to 4s, right?
Yeah. So this is a 1 to 4 product.
It is also a 1 to 4, but it's also a 5 to 8 residential or 2 to 8 mixed use. Mixed use meaning you have, a couple of apartments or 4 apartments upstairs, and you've got the retail and the office downstairs, something
Right.
like that. They're all over the Bay Area. Pretty much every street corner has got one. And these people have never seen this product before. So this is really big.
And is this a 30-year, 5-year, 10-year?
They're all 30 or 40-year loans. They can be fixed. They can be ARMs, adjustable rate mortgages. All of them come with an interest-only option, which the only reason I'm mentioning that is because typically interest only increases your cash flow for your investor buyer. So
I was listening to one of my friends say this. They're doing some interest-only loans now to qualify for deals that they go a little tight. Qualify for here. In 5 years, it becomes principal and interest. And their thought process is in 5 years, rents will have increased.
Exactly.
And now I can debt service it 5 years from now with principal.
An example of that is we have a 40-year fixed interest-only loan. The first 10 years are interest only. So in 10 years, when it goes fully amortized, it amortizes over 360 months, so 30 years, which by then, you're right, so what? And especially with the way the rates are today, we're still in the 4s and 5s on an investment property like that. So that's pretty exciting. Some of the other non-QM products that we offer are for self-employed borrowers. So if you hear one of your clients who wants to buy go, my tax returns just don't really show the amount of income that I'm making. I'm self-employed. Yeah,
me.
exactly.
That's me.
Realtors are my number one clients.
That is me right now. It is a
Exactly.
pain to get a loan. It's
It's
hard.
really
It's
hard.
work.
It's very, very hard. And if you have a very aggressive tax accountant, you're going to have a difficult time getting a loan based on that. I've been self-employed my whole life, so I know what that means. And so now there's so many options. We can use 12 months of bank statements. We can use 24 months of bank statements. We can use business bank statements or personal bank statements. We can use 1099s only. With none of these documentations require tax returns at all. We analyze your true cash flow, and that's how we qualify you for a loan.
And so you're taking personal and personal and corporate bank statements, correct?
Either or. I'm going to use either one. So I'll give you just because I know a lot of you are all of you are self-employed. If I'm going to use personal income, personal bank statements, I can give you a credit for 100% of every deposit that goes into your account or income. If I use your business bank statements, I'm going to have to do income expense statement, and we can talk about that more. I'm not going to go into big detail, but we have to give you some sort of expense factor. Most realtors don't have a lot of expenses. I mean, my sister's a realtor, I know.
So
yeah.
What kind of rates, terms are we looking at for those income statement properties?
We're offering all the same income, all the same programs that we offer for investors. So the ARMs, 30-year and 40-year fixed, interest only is an option. We don't qualify you on an interest-only payment when it's owner-occupied, but it still helps if if you're 60 years old and you get a 30-year loan. I don't know, are we gonna? Maybe you'll make it to the payoff. Some people just don't care. They don't want to pay off the loan. They'd rather pay the interest only. Now, that being said, anytime you get an interest only product, you can make a payment against that principal. Anytime you get if you get a big extra check and you say, I'm going to pay this down, it will automatically the next month your monthly payment will go down.
So one of my problems that I face, because I deal with a lot of investors, is they run across, I hit the 10 cap rule, which I think now is 8 with Fannie Mae, Freddie Mac, right? I can only get so many loans under that program. Right. Now I'm looking for other money. They're going hard money. They're doing they're trying to do seller financing, which just doesn't work in today's market, or they're trying to raise capital with friends and family. This gives them those opportunities that they never had before.
That's exactly right. We don't have a cap on the finance. It's unlimited amounts for finance properties. So there is no cap on that at all. I have a guy right now I'm working with who has 30 properties. And none of them were financed. He bought them during the 2008, 9, 10, 11, 12 time. So he kind of paid cash or took over a mortgage. He did some very creative stuff. And now he has these 30 properties and we're financing all of them.
Nice.
Yeah.
What kind of rates are we going to be looking at on these programs?
Everything did go up a little bit lately. So we're in the high 3s, low 4s for like the perfect scenario.
That's awesome.
Yeah. The higher the loan to value and the lower the FICO, those are the two adjusters. The main one, it's all risk-based pricing. So that's how an investor looks at this. They're like, lower the loan to value. If you have those two things together, a very high FICO and a low loan to value, you're going to be sitting really nice. I mean, it's going to be a very nice interest rate.
Are you guys doing hard? I buy a lot of properties, and buy them hard money, come back, refi them. What kind of programs do you guys have for that? Because I do work with an investor group, a bunch of investors that I work with. What kind of loans are you using for that? Most people just go hard money, which is hard.
Private. Well, it depends on how quickly you need to do a transaction. I find typically if you're looking at a property, it's a fix and flip property or something, it's going to be a high demand. People are going to come in there with cash. So you've got to come in there with a bridge loan. So you've got to come in there with private money because you're not going to be able to compete against these people that are professional fix and flippers or fix and hold.
Right.
So you're going to probably need private money. If you have time, and the property is It doesn't have to be perfect. It doesn't have to be like FHA. I mean, things don't have to, but you do have to have this kitchen and the windows and things like that.
Right.
If anything is like really needs a lot of work, I got one right now. There's a roof. There was a fire in the garage. Right, you can't get a loan on that property unless it's private money. We funded it 100% plus the closing costs, and then he's going to fix it up and keep it. And
Okay.
we're going to refinance him into a DSCR, debt service coverage ratio. He's a very experienced investor, and that's what he does.
Perfect.
Yeah.
All right. So those are all the questions I have. Any of you guys have questions that you guys are running across for some of your scenarios? No? Okay. So Tammy, one of the things I know my agency and your group is talking about is doing some co-marketing together on radio right now.
Okay.
So one of the reasons why I want my group to know this is because this is who we're targeting and attracting and having a solution that most people don't have, right? That's the big thing. We're going after solutions that the rest of the market doesn't have. And then eventually they'll try to catch up, but we've already had this for a while.
Right, you'll be experts at it by the time everybody figures it out. And that's the thing about us, and Mark probably already told you, as far as because we're a co-company
Right.
of them. We probably of all the lenders out there that do private money, we offer more programs than anybody by combining the non-QM and the multi-investor property, and then bridge loans of all kinds. I mean, bridge loans for just about anything, and including owner occupied, which almost nobody else offers. This is a pretty nice book of product for anybody to be able to should be familiar with. You'll have a good competitive edge.
I was going to say, one of the things, we just sold 2 duplexes and a triplex in this last month.
Okay.
And investors are coming out of the woodwork to do these kind of programs. So I'm getting all the buyer calls like, hey, what is out there? I want to pull money out of my house today to go buy this home. And I can tell that there's people that are interested in these programs. And if you send them to your traditional lender, they have no clue.
No.
They have no clue.
They don't. And that's the other thing. And I won't keep you too much longer, but the thing that I really think sets us apart is we are always looking for the solution for the borrowers, the sellers, and the buyers. Because if you go to a traditional bank, they're going to take a look at it and they're going to go, nope, and they don't ever sit down and go, well, wait a minute here. This looks logical. And we have a loan committee here where we sit down. If something does get a little squirrely, we sit down together and we go, I think there's a deal here. How are we going to get it done? We just don't say no. We say yes. Anytime we can. I mean, I can't even remember when we did say no if we package it right. And that's something very different from another lender.
I will tell you, having bought a few properties, I was getting a loan on a refi, 70% loan to value. I had enough cash in the bank just to pay it off. And they ran me for like 5 months, every document under the world. And it was just painful. Like, you don't get it as a traditional bank. And it was like, okay, you're approved, but we need one more document and then one more document. And it was like, and for me, that was just hard because I was hung up because you don't want any more credit inquiries. You didn't want to go do anything else because you're just in the process.
Right.
It's painful. It's painful. So,
and I can't say that we're not going to ask for a lot of documents. When the DSCR program, we're not. But on a regular loan, sometimes you get a document and it opens up we call that Pandora. It opens up, like, oh, wait, what's that? And I can't say that we wouldn't do that. It will not take 5 months. I can tell you that. Yeah. That sounds like Wells Fargo.
Yeah. I would say I'm gladly willing to pay a 0.5% interest rate higher for not the pain.
Yes, it's painful.
That's what my investors tell me.
Yeah.
Just don't make me go through,
Don't make me go through that. Well, that's why this investor program, the DSCR program, is the one for them, because we don't even look at a tax return. That thing is over there.
Perfect.
Right.
Okay.
Any other questions?
Any other questions, guys? Yes, go ahead.
Okay, so in this scenario, tell me if this would work with this type of loan. So the the seller that I have in Livermore, Ron, that wants to sell the house, but because of the rent moratorium, she can't get them out of there. So she's looking to purchase a home for her daughter, but she needs to be able to sell that house, and she just can't do that right now. Would she qualify for something like this as far as a bridge loan until the home is able to go on the market?
Did you tell me that the home she's wanting to sell is rented?
Right, it's a rental right now.
And it's under a rent moratorium of some sort?
Yes, because of Alameda County.
Okay. Yeah, once her daughter moves into the house for 5 years, I think she's probably stuck, right? Isn't that how that goes?
The rules are changing every day.
Is she free and clear or something on the property that's rented?
So no, she does have a loan balance on the property. She has I believe two other rentals, but
Okay.
this is the one she would like to sell and be able to help her daughter get into a home now while rates are low. And
okay. You know, Cassandra, I think you should probably call me so that I can go over the whole scenario with you and give you good advice. I have a lot of questions about that. I would want to know how much the property is worth. I can tell you the questions that you need to know. How much is the property worth that she wants to sell? How much does she owe on that property? How much is the home she's going to buy going to be worth? What price range is she looking in? And then I'll be able to tell you what I can do for you. Okay. And I think you've showed my information to everybody, right?
Yep. And then you're going to send me a flyer so we can attach this.
I'm going to send you some flyers. I'm going to send you some flyers that can be customized with your own logo. You can co-brand them with your people. You don't need to co-brand them with me. You know where I am.
Yep.
It'd probably be better to do it with your own loan originator, so you can teach them these programs. I'm happy to work with them.
Perfect. Thank you so much, Tammy. I appreciate it.
All right. Thanks for having me. All right.